Achieving financial independence means having the freedom to choose whether work is a necessity or an option. Since Vicky Robin and Joe Dominguez penned Your Money or Your Life in the early 90s, the concept has gained traction, empowering individuals to take control of their lives through mindful spending and investing. This movement, rediscovered by bloggers in the late zeros and early tens, has evolved into what's known as FIRE, Financial Independence Retire Early. Welcome to our channel, where we navigate the path to financial freedom together, one step at a time. Join us as we explore the strategies, insights, and success stories that paved the way to a life of abundance and independence. However, financial independence isn't just about retiring early, it's about optimizing life and finances to live on your own terms. While some may view it as an exclusive luxury, it's a concept for everyone. Whether you seek job satisfaction, more travel, or greater time freedom, financial independence could be for you. The beauty of all of this is it's up to you. You're in charge of when you hit your number when it comes to things you can control. There are many paths to FI, but starting with the most prominent will establish a baseline for the rest of this conversation. The 4% rule. To plot our financial journey, it's essential to grasp some investment basics, such as the renowned 4% rule from the Trinity study. This rule suggests that withdrawing 4% annually from a diversified portfolio may sustain it over extended periods. However, it's crucial to note that this rule is based on a 50% stock and 50% bond portfolio, which some may consider conservative. While opinions vary on the ideal withdrawal rate, with suggestions ranging from 3.75% to 4.5%, it's a topic that warrants thorough consideration. A paycheck for life. Consider a scenario where you have $1 million in a diversified portfolio. Following the 4% rule, you could withdraw $40,000 annually, theoretically sustaining your lifestyle indefinitely with a 7% average return and 3% inflation. Applying this rule practically, if you require $100,000 yearly, you need $2.5 million invested. Feeling overwhelmed? It's common. Breaking down the plan into manageable steps can alleviate stress. Conducting a lifestyle audit, applying the 4% rule to each expense can offer valuable insights. For every $100 monthly expense, you need $30,000 in retirement savings, prompting reconsideration of expenditures like cable or streaming services. The importance of intentional spending. It's understandable why scrutinizing every expense is appealing. Picture each expenditure as a shackle tying you to a job you despise. It's a chilling realization. However, there's a fine line between frugality and deprivation. Ramit Sethi offers sage advice. Spend extravagantly on the things you love and cut costs mercilessly on the things you don't. The Latte Factor. Consider the notorious Latte Factor, a point of contention among financial experts. Spending $7 daily on coffee accumulates to $2,555 annually, a sum that, when invested, could significantly impact your financial future. Following the 4% rule, this amount would require $63,875 in savings to sustain. While financial advisors may not emphasize this approach, the financial independence movement challenges conventional thinking by offering a path to retire in 10 years. Understanding the opportunity cost prompts a reevaluation of expenses, leading to a shift in priorities and lifestyle choices. The financial independence community exemplifies this mindset, taking frugality and investment to new heights. So how do I apply this to my life? Your savings rate, the percentage of your income you save, is pivotal for achieving financial independence. Increasing it widens the gap between earnings and expenses, accelerating your journey to financial freedom. Small adjustments to your budget can have a significant impact, shortening the time to retirement. With this understanding, you gain clarity on when you can comfortably retire. Ready to take the first step, you can only slash expenses so much. However, through certain life hacks and generally a realistic look inward at what brings you joy and what you are spending out of habit, you might be surprised where you can gain back some ground. That said, for most, the real opportunity is to increase your income without your lifestyle increasing in lockstep. Both are easier said than done. The three main paths to financial independence. Most individuals pursuing financial independence often have well-paying jobs, which they leverage to increase their savings rate through various means like optimizing workplace benefits, such as 401k, employee stock purchase plans, and HSAs. Some may also delve into real estate investing or explore side hustles or entrepreneurship for additional income. Let's explore how each option can be optimized. For those on the do-to team climbing the corporate ladder, there are strategies to utilize workplace benefits effectively. Employee stock purchase plans offer discounted stock options, which when strategically bought and sold can yield profits. Health savings accounts, HSAs, provide tax advantages and investment opportunities often overlooked. Maximizing annual bonuses involves cash flow management tactics to reduce tax withholding and maximize contributions to retirement accounts like the 401k, boosting savings efficiently. By analyzing your financial situation and optimizing income and expenses, many can achieve early retirement within a decade or even sooner. Real estate as a path to wealth. Real estate has long been favored by the wealthy as an avenue to financial independence, FI. offering both part-time and full-time investment opportunities. House hacking, where one lives in a multifamily property and rents out the remaining units, is popular among the FI community as it eliminates the biggest expense and generates additional income. For those uninterested in hands-on real estate investment trusts, REITs, provide exposure to the market without the need for significant capital or property management. Short-term rentals, facilitated by platforms like Airbnb, offer another entry point into real estate investing, allowing individuals to offset mortgage payments or even achieve FI through scaling. While less passive than traditional investments, short-term rentals can be systemized for efficiency and accelerated progress toward FI. Entrepreneurship presents the ultimate freedom and financial upside, but it requires clarity of goals and a strategic approach to avoid creating another full-time job. From freelance work to franchising or passive ventures like vending machines or car washes, the possibilities are vast. However, entrepreneurs must be mindful of tax implications, as achieving FI quickly can lead to tax challenges that require careful planning and strategy. Everyone desires tax-free income, but the key is finding the most optimal way to achieve it for your family's plan. Starting your journey to financial independence, FI early allows you to benefit from contributions to tax-deferred accounts. By converting pre-tax retirement accounts to a Roth IRA, once financially independent, you can potentially capitalize on tax arbitrage, leveraging lower tax brackets for significant savings. For those starting later in life, strategies still apply to accelerate savings rates and potentially retire sooner. Utilizing the right job, savings rate, and spending habits can lead to early retirement even from scratch. Meanwhile, starting early benefits the next generation with options like UTMA accounts and employing children in a business to fund tax-free income through Roth IRAs. In investment strategy, many advocate for index funds due to their low fees and consistent returns. Passive investing via low-cost 401k options allows for systematic investment without the stress of market timing. Dollar-cost averaging is a simple yet effective approach, ensuring consistent investment over time regardless of market fluctuations. The goal is to accumulate shares steadily to build wealth over the long term. Where the FIRE community misses. The FIRE, financial independence, retire early movement often gets misinterpreted as extreme frugality and sacrificing all enjoyment until reaching financial independence. While some individuals do take it to extremes, it's essential to find a balance and have a clear purpose for pursuing FI. Many FIRE enthusiasts are avid dieers, but this can pose challenges in terms of protection, such as being underinsured. Life insurance is an area where the community could benefit from new insights, as permanent insurance like whole life can offer tax advantages and financial flexibility. Aside from life insurance, it's crucial to consider other protection measures like disability insurance and estate planning. Professionals can provide valuable guidance in these areas to ensure your hard-earned savings are protected. Overall, the FIRE movement has brought positive change to personal finance, empowering individuals to take control of their financial futures and live intentionally. Join us on our channel as we explore the path to financial independence together. From practical strategies to inspiring success stories, we're here to guide you towards a life of abundance and freedom. Thank you for being part of our journey.